another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbarago. It's the 29th of May. We thank you for joining us at this time on the show.
Let's now begin with news now. The South African Reserve Bank has raised its main lending rate by 25 basis points to 7%, marking its first rate hike in 3 years as it responds to global and domestic pressures. Seja Hayago said the Monetary Policy Committee also considered a larger 50 basis point hike, but opted for a more cautious move while waiting for additional data. Let's listen.
Central banks are still mostly on hold. Markets now project major central banks will increase rates this year, having dropped expectations for cuts. Moving to South Africa, we have lowered our growth forecast for the next 2 years. Before this shock hit, the economy seemed to be gaining momentum, with the incoming data mostly positive. Now, however, we face a painful combination of higher global uncertainty and reduced disposable income. This will hit both investment and household consumption, which have been our main growth drivers. The recent floods in the Western Cape, Eastern Cape, and Northwest provinces have also done severe localized damage. The frequency of these extreme weather events underscores the threat from climate change. We see downside risks to growth. That said, the fundamentals of South Africa's economic recovery remain intact, as reflected in the recent decision by Moody's to assign a positive outlook to the sovereign credit rating. The macroeconomy is demonstrating resilience to global challenges. South Africa's terms of trade remain elevated, lifted by favorable prices for key exports. Domestic reforms continue to support a pickup in growth potential.
In other news, the World Economic Forum says the global economic outlook has deteriorated sharply, with nearly 9 in 10 chief economists expecting global growth to weaken over the next 12 months amid rising geopolitical tensions and disruptions linked to the Strait of Hormuz. According to the World Economic Forum's latest chief economist's outlook, 94% of respondents expect global inflation to rise, driven by higher energy and food costs as well as supply chain disruptions, while only 13% expect a full global recession. The report also showed that 92% of chief economists expect greater adoption of artificial intelligence over the next year, although optimism around its near-term productivity gains has moderated. The World Bank discusses the latest commodity markets outlook and its implications for the global economy. Anna Bierde and Ian Kose examine how rising commodity prices, including energy, food, fertilizer, and metals, could impact inflation, growth, and jobs, especially in developing economies. The discussion also highlights risks from Middle East development and the policy responses needed to manage food security, energy shocks, and long-term economic stability. Let's listen.
Obviously, the energy markets are being affected the most. We are expecting energy prices to be around 24% higher this year. You look at, the oil price, the Brent oil, we think that price is going to be $86. At the beginning of the year, we thought the price is going to be, on average, for the entire year is $60. So this is like a 50% increase.
And what's the highest it's gone so far?
Actually, it went up above, 130.
Yeah.
So, and fertilizers, very important. Of course, the fertilizer prices have increased sharply.
Yeah.
We are expecting the price to be above basically 30% relative to last year.
Yes.
And there's a certain nitrogen-based fertilizer, urea. We think that the price will be higher by about 60%. So that has huge implications for farmers' ability to afford fertilizers. And that has, of course, implications for the crops this year and the next year, and ultimately price of food and food insecurity. And finally, when you look at, metal prices, they are going to have record levels this year, especially aluminum, because Middle East provides a significant share of aluminum global supply. But you look at, copper, you look at gold, platinum. Across the board, you will see higher prices. And it's because of, AI-related investments, renewable energy projects, all of them using metals, and you see, higher demand. So all in all, across the board, higher prices we will see.
Finally, on News Now this Friday, the African Development Bank Group has reviewed the progress that its financing program is making across sectors in Africa. The latest edition of the African Development Financing Review, which was released on Thursday in Congo, Brazzaville, also reviewed the DFI's 10-year strategy program, now in its second year of operation. Let's take excerpts from one of AFDB's vice presidents, Kevin Kariuki.
Last year, the bank projects provided first-time electricity access to 1.5 million people. This means 1.5 million people with changed lives, children able to study after dusk, ability to store medicines, capacity to pump water for domestic use and irrigation, creating jobs, and ultimately transforming communities and by extension economies. You will be pleased to note that the 1.5 million people I referred to is part of the 5.2 million people provided with first-time electricity access since the commencement of Mission 300, and you saw that in the presentation earlier. And we hope to be able to reach 8.5 million people this year. That is 17% of the 50 million target that we hope to achieve by 2030. But what this means is that we must double down on efforts to accelerate access. To date, our portfolios project that we can deliver 35 million beneficiaries, meaning that we need to originate an additional 10 million people with access by 2030. The omens are good, however. This year alone, we are seeking for board approval for projects that will generate about 8.8 million access for 8.8 million people in countries such as Cote d'Ivoire, Eritrea, Nigeria, and Uganda. But to guarantee that meeting the 50 million target requires government to seek support for project financing. But with 30 energy compacts already developed or established, and another 10 in advanced preparation, we are confident that we will be able to achieve the 50 million target by 2030 in furtherance of Mission 300.
I am Melissa Enoch, and that's it on News Now for today. The show returns shortly after the break with Grace at the FMDQ Archives Room with our Markets Round. Stick around.
The shilling is a market-determined rate. What you're asking me is what's going to be the supply and demand of the shilling in the coming month. So certainly, we know that we import, we export. So the inflows and the outflows. So depending on which one is going to dominate, right? If the inflows dominate the outflows, the currency is likely to appreciate. And if the outflows dominate the inflows, the currency is likely to depreciate. But what Bank of Uganda will ensure is that whatever direction it takes, it does so in a smooth way.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for a report on how the markets closed this Friday. Hello there again, Grace. How are the markets wrapping up?
Thank you, Melissa. Let's now take a look at how the markets rounded up trading for the week, starting off with the equities. The Nigerian exchange slipped 0.05%, while the BRVM in Abidjan gained 0.77% to 426.07. The Nairobi Securities Exchange edged down 0.02% to 205.69. In the South, the Johannesburg Stock Exchange declined 0.27% and Mauritius Semdex slipped 0.04%, while in North Africa, the markets remained closed. Finally, let's take a look at the energy commodities. Brent crude fell 1.63% to $92.18, while US WTI declined 1.43% to $87.63. Natural gas rose 2.80% to $3.77, and Arabian gasoline dropped 1.48% to $3.13 as at 13:29 GMT. And that's our Money Moves markets today. Back to you, Melissa.
And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and have a splendid weekend.